Are you a sole trader or thinking of setting up a new small business of your own? Well, I've got 5 tips for you to help you understand what you need to know in relation to your tax. My name is Jodie Porteous and I'm the Chief Educator and Tax Agent at Northwest Accountancy. And here's 5 things that you need to know about your new sole trader business. First, all of your business income and your business expenses need to show on your tax return. If you've got more income than expenses, then this is profit, and profit is taxed on your tax rate depending on how much other income you have. So if you're somebody who's just running their business and that's all, then you're taxed only on the profit that you make. But if you have a side hustle business, then this income or the profit will go on top of your any other full-time or part-time employment income that you have, and that may mean that your tax rate will be higher than somebody who only runs a business in their name. Number 2, a good rule of thumb when starting to put tax aside is 25%. And this is if you're not registered for GST. And if you are registered for GST, then try 30% or a third of your income. It does depend on how much profit you make as to how much tax you'll pay. So be sure to check with your accountant and make sure you get the right percentage for your circumstances. However, if you do end up saving more money for your tax when you lodge your tax return and you've got money left over, then this is like a tax refund for you and you get to spend it on whatever you like or leave it there as a buffer for next year's tax bill. Number 3. Record keeping is super important. If your cost is in relation to earning an income, then it will be claimable on your tax. What does that mean? Well, it needs to be related to, or there needs to be a nexus between earning the income and creating the cost. So you can't really claim the cost of feeding your cat in your home office because your cat keeps you keeps you entertained while you're busy in between appointments or clients. There needs to be some sort of relationship between the cost and the income. Every cost you have reduces the profit that you pay, the profit that you have, so that you pay less tax overall. Now, when it comes to record keeping, it's really important that you have a system in place. So having software to help you with that system is really good. But when you're starting out, you probably don't have a lot of transactions, so a spreadsheet is just as good. For software, we do recommend Xero, by the way. Number 4, it's good to put some money aside in case you get sick or if you want to go on leave. So have a separate bank account for this so that you don't need to stress if you can't or if you don't want to work. A great way to squirrel it away is to have a totally different bank than the one you normally bank with and rarely look at it, and put maybe 5% of that income aside each week so that you know that there's always money going into it every time you get paid, so that if something happens, you've got some money there to pay your rent or to help out with the groceries. Number 5, your ABN and your tax file number are yours forever. So if you do choose to close down your business, then you'll keep the same ABN even if you start up the 10 years later. Now, bonus, I said 5, but there's actually 6. Don't forget that you are working for yourself. So you need to make sure that you're charging the right prices so that you can cover your living expenses while still paying all of your business bills and saving for money for tax too, as well as that little buffer bank account too. If you've got any questions about anything I've said here, please reach out and we will give you a hand. Thank you.